Hello guys, Life and Forex here. Hope you all had a fantastic weekend. So we'll be going through our weekly analysis, just looking at what's happened in the previous week, why it's happened, and what we're going to look out for the next week. So if you like the content you see, then give us a like, give us a subscribe, and comment on the video with your thoughts. So let's get on with it. So we're first going to take a look at US 100 NAS. We've seen quite the pull up. We've seen a bullish engulfer on the weekly candlestick here. A nice foo candle. So that probably means that we're going to come down for a retest at some point, and we'll be looking again for buys in that. Why that's happened, we can pop over to this one here. I've got to find this article again, it's just taking me off. But basically, the Fed, they announced their monetary policy, and they had the FOMC meeting. With that, they've raised the interest rates, and this is the first time they've actually done that since about 2018, so just before the pandemic hit. And with that, a lot of investors have sort of been piling back into indexes, tech obviously being sort of the better one to go for at the moment. In terms of the future, they've got a lot more growth to them than other stock indexes. As you can see here, look, basically just says what I just said to you there. So yeah, a lot of people now, they have the confidence, that this will be going back up now. Obviously, this is still very uncertain because we're in a period of uncertainty with the war. Everything that's happening in Ukraine, nothing really seems to be getting any better at the moment. In fact, it just seems to be getting slightly worse. And no one can sort of predict what's going to happen next with this. But also, the Fed chair, he did say that he has the confidence that even with the higher interest rates, the economy is strong enough to withstand that, and it will be able to handle that. So that's a good sign. Sort of very hawkish view on everything, which is why we've sort of seen the massive gain. We did gain sort of about, I think it was like 8.2%. So it was pretty crazy. Let's have a look. A little bit more than that, about 10% on my chart. So yeah, had an absolutely crazy week, that one. But that's what I'd be expecting with that, just a little bit more of a push up. We are coming up to some order blocks on that one. So whether when this market opens, whether we see it has pushed up a little bit more to then come down for the retest, and then we'll see what happens there in terms of buying again, or if it's going to come up to these order blocks, reject, and we still have the downward movement. Not too sure yet. However, from a technical analysis standpoint, this does look good to go up and continue going up. But as you can see, the market structure up here, sort of 16,765. So with that, that would be the sort of top point that I'll be looking at taking out my buys that I have in NAS, just because when it comes to all-time highs, we could just sort of break that structure, come back down, and then we'll be coming back down. But as I said, we are in a period of uncertainty with all of this. So what will happen, no one really knows, to be honest. It's something that we certainly need to look at. And then if we head over to the economic calendar, so over on here we do have what they did say, the Fed preview. So with this one, we've got the high inflation still, as the CPI was 7.9% for February. It's highest in over 4 years, and they do have a 2% target. And then they have two mandates. The Fed, they've got to focus on as many people being employed as possible, whilst also keeping inflation low. So it's sort of like a double-edged sword there, because it's hard to do one without the other. And in my opinion, politics is a very hard battle to win. Can't please everyone. It's just who you can disappoint the least. Pretty much the same with the Fed as well. But everything that they were saying, they are focused on bringing down that inflation. And they've raised interest rates, as I said, for the first time since before the pandemic. And by the looks of it, what they've said is they're going to be doing that several times over the year. So yeah, we will be seeing that increase. But as I said, they do think the economy can handle it. So we just have to see how that one goes, really, because it was quite bad for the US dollar when that news came out. US dollar did hit some lows, but indexes did go up. So in terms of indexes, as I said, that's exactly what we're looking for, and that's what we'll be looking out for in the coming week. So with gold, gold's a funny one at the moment. Obviously, we didn't actually hit that all-time high the other week, And with that, I was waiting to see how this week ends. Given how this has ended quite strong, there wasn't actually that much of a pullback on gold. I feel like this is going to be coming down quite a bit more. With the rise in interest rates and how the Fed have said that they want to keep the inflation under control, gold has sort of like a correlation with the bond yields, and with the short and medium term bond yields, they did go up, moved higher with all the news. But the very long term yields, so like the 30-year ones, they dropped. So that implies that the Fed probably will be lowering the rates again at some point. So like this sort of environment that we're in presents a lot of stagflation, and with that, if that does happen, and that is likely, then I think gold will be going down, because gold does sort of move in the opposite environment basically. What I reckon will happen if we move over to the monthly chart is we'll see something just like 2007. We had a similar thing here, and we had this like drop off from here, pretty much exactly similar environment that we're in now, and that dropped off about 27% before going up. I'm still long term, like very long term, gold is going up. Still expect it to break those all-time highs, but not without coming down first, and especially after seeing the price action we did last week with the weekly close being quite strong. I think it's totally feasible in the sort of, when I say near term, I do mean, within the year, potentially we'll be coming back down to this sort of 1676 level. I'm going to be having two trades on, trying to find the retracement on this week. First down to sort of the 20 monthly EMA, just back into range, just sort of at this area of support that you see here. But I am also going to have a second position that I'll be holding longer, coming down to the 1680 level. And as I can see, that would be the case for what happens with that. I think we will be coming down first. We've attempted that high, we've failed to even break that. And with how the weekly closed, and given the fundamentals of the world at the moment, I think that would be the case with that. I think gold would be the one where it would take slower than other like precious metals. Nickel's an interesting one. If you have nickel in your market, this I've never seen anything like this in any precious metals before, and I think even someone that's been trading about 60 years, they will say exactly the same as me. This is like truly a one-of-a-kind event. As you can see from this chart, it's grown absolutely massively. This all happened because of a Chinese investor. Don't really know the ins and outs of the story, but they were trying to sort of make back, I think, some $8 billion they lost, and they really manipulated this market, and they had to close this down when they reopened it. I think it like doubled and went to 100,000. It just doesn't show on my chart, and then had to it dropped off. Like there was a big short, but if you got nickel on your broker, I'd be shorting this. I wouldn't be long in it at all. I'd definitely be shorting this. There was definitely some money to be made in that. Again, for the same reasons that we said. But I do think silver will suffer the most. We haven't seen the pushes from silver as we did with gold. It hasn't moved in the same way. Like we're still well within range. And given everything we discussed when we were looking at gold, I think silver will suffer more. So I'll be looking at an entry in silver this week as well, and be looking to take that down to sort of this bottom trend line that we see here. With the GBP, so if we head back over to the economic calendar, so let's try and find where we were on the previous week. So I believe we actually had some good news for the GBP at, what day was it? Tuesday? Yes. Yeah, so in terms of our average earnings excluding bonus and our claimant count change and our unemployment rate, all of these were better, so that was very good for the GBP. But then I believe a few days later we did have a couple more events here. Yes. So we had the vote rate hike and our monetary policy come out, and our interest rates also be raised by 0.25%. So generally, even though the interest rate goes up, that would be better for it. There was a lot of things in the monetary policy that suggests that for the near term, we'd be going down. I did do an analysis on GBP NZD, but this doesn't come into play anytime soon with this. With that one, what we'd be looking for is, we head over to it, we'd be looking at it to come to this major support zone and reject off a monthly liquidity point that we saw on the monthly time frame. And then, we've got a great risk reward on that trade, 13-1 with that. So that would be one that would be taken over the long term with our different TPs set out here. So that looks like a good trade. So I think in the near term, only on some pairs, such as GBP ORD, that we're going down slightly more just before we come up, because these currencies are quite strong at the moment. But in terms of other pairs like JPY and their monetary policy, obviously since they released that, it was pretty bad for the JPY. They're probably suffering the most out of the sort of major economies. And yeah, obviously everything's a buy against Japanese yen at the moment. And obviously US dollar, as we discussed, was doing quite bad. There's a few channels to be considered with the GBP pairs. I've drawn one up here on the daily. I think this might be a weekly channel. And I expect this to sort of retain that upward movement. We had a quite strong ending week there, so I expect this to come up to here. Just the same with GBP Chef as well. I did sell upon the news the other day, but I did take that out with a little bit of profit. Not too much of a strong candle to stick up with the GBP Chef pair. I don't expect it to move as fast as the GBP USD pair. I'd expect consolidation and then a move up. It could even be a false breakout before coming down a little bit further. But yeah, GBP is looking good for economic recovery, given that all the things in the monetary policy, which I will post in our Telegram group for you guys. I won't go through all of this now because this is a very long article, very, very long. But yeah, you guys can take that as a read for yourself. It does look alright, and we're on track. We're sort of trying to do the same as the US at the moment in terms of meeting the 2% inflation target. And yeah, we've raised interest rates a little bit more.